The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 20th of March. I wanted to go through a number of things. I'm going to treat this today as Technical Friday. I'm going to go through a lot, answer a couple of questions, but mostly I want to go through. And today, after the bell, I'll do my market overview for my subscribers. I do about an hour long sometimes. Lately, it's been an hour and a half because there's so much to discuss. Overview of the market. And let's just start immediately. The Dow is up 84 after being down 200 points at some point. It's at 42,044. This is good action. And yesterday we had a very nice rally after the Fed speak, and that said that we should hold quite well. But then there was news over the in fact, look at the chart. You'll see right here. There's the E-mini. You'll see what happened. Everything's tooted along very nicely right there. And we in the 5750s, 5740s, and then all of a sudden going sideways. I always talk about this rectangle formation, very long rectangle formation that should pop out of the rectangle for a moment and then start to move underneath the rectangle low, the base. And you never know how deep it's going to go. Well, look what happened. It went from the 5740s down to 56. What's the low? 5682.50. And now where are we at? So 5682. We're at 5743 right now, moving very nicely to the upside. So that was it was unfortunate. We actually went long. I've tried so hard for a long time not to have intraday updates, because my rule of thumb has been, over the years, decades, I've found that an intraday update, invariably the next day you can get an even better price. But I just felt that it was important because of the structure that was being formed, that to at least start a position, and that was in the IWM, one of the ETFs of the IWM, because the IWM was starting to show some superior action on a short-term basis, and I'll explain to you what I'm looking at. Look, with Technical Friday, right? The MACD crossed positive. The stochastic was down in the 10% area, and then it rallied. The on-balance, the gray, let me give you the right pointer. The gray relative strength index was starting to move nicely. We made a round number, 197.00 low on the 13th. And the 9-period moving average, the pink 9-period moving average, was moving very nicely to the upside. Oh, it's still far away from crossing positive. But it seemed to me that for the first time, having hit 197 round number on the exact 107.93 is the 200-period exponential moving average key support, that there was at least a decent chance of a bounce. Well, we got stopped out for a small loss, and I'll have to consider now what we're going to do. But it was unfortunate that there was that sudden news that you can see the news now. What news? The market's saying, what news? This is great. So anyway, so that was the one thing. So let me give you overviews now. First, we'll start with the overview. The Dow right now is up 100. Well, actually 88 points at 42,055. Yeah, you can see the 9-period moving average, this little pink line here, doesn't have the drama. It doesn't have the same kind of, there used to be a Grand Prix, the Le Mans Grand Prix, that had these bends, these huge bends for automobile, for the F1 Formula One races. And look, this is not the same thing. Look at the difference in the, I don't want to go there now because I want to do other things. Look at the difference between the IWM 9-period moving average already starting to move up. That means the histogram was about to go positive and is now positive. But look at the Dow. The Dow histogram is rallying and it hasn't yet turned positive, and it's not the same pattern in the MACD, and the 9-period moving average is still very slow to turn up. So that was just an overview. So what am I looking at? A double should I do that now? I'm going to do that now. It's Takeover Friday. I can do anything I want because it's just important that I kind of show some things. So there's been a lot of talk about the relationship of the Dow to 1929. Personally, I see nothing that is similar to 1929 in the chart, that is. Look, this is 1929. This is 1927. There. So look at this. This is a daily chart. Let me just, the monthly chart. Let me just check. Yeah, you can see it very nicely. Very often, black charts, you can see nothing in the Tiger TV because the print doesn't come up. I made the print yellow, the yellow for the notation in the Chapman wave. So this is the 386.10, September the 1st. This is the long weekend of 1929. In this period here, in the summer, am I doing that correctly? Yes, in the summer of 1920. I'm not going to go through it now. I've done a whole webinar on it a long time ago about Goldman Sachs coming public, and there's a lot going on. The Empire State Building was, those papers were signed. And boom, we go to the top, and it was the quickest skyscraper at that time to be built. It was 30 months or something, and it came. It was ready for office workers to come in. I think in 1930. So that was 30 months, 1999, from when it started. Yeah, so I think 31, 32. But look what was fascinating. So the Dow, look at this chart. Here's the chart, steady, 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 steady. Look at the MACD, look at the MACD. This is a different chart altogether. This is the same chart today. This is the same thing. I don't see any similarity to this. I don't see any similarity unless this is the very beginning of a major move now with so many things going on, with tariffs, with geopolitical, with geoeconomic, with gold spiking higher because countries are afraid of what's going to happen, with the unemployment rate about to really push higher because of all the people that have been taken, their jobs have been cut. There's just so much going on with the fact that you've allowed, the country has allowed people now to burn cars because they are disappointed in whatever it is. There's a lot going on that is different to 1929 top. That top was a period of excessivity that we hadn't seen because there was the war, First World War, then there was the flu epidemic, then there was the Second World War, just think everything's coming right. And then then there was a depression, and then the Second World War. So that whole period, this is nothing like it at all. Okay, that's my opinion, right? The other thing is, this is the top September. This is the October candle, right there, October. You go from 358.20 down to 212. We don't have that. This is a monthly chart, right? So far, we don't have that. So I see no. I can go on and on. I'm not going to waste time. I'm just saying I don't see that. There could be other things, but it's not the same things as 1929. I'll be right back. Dow is up. Yes,
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, so let's just get to the nitty-gritty. It's a question that them stars want to know about Harmony. What's the count in the monthly chart? So let me just do this. And you can't start from 2015 without considering that was a peak D back in around about July or so of 2020, and then having to restart a brand new buy signal right here, and that was at $1.94, $1.94, and that was the low of, there we go, the low of September of 2022. Now you can go peak A, peak B, peak C. This is a Chapman wave overlapping wave. It goes powerfully through that D, and it goes to a new D, and it goes instant restart because this 8.04 low wasn't taken out. If it was taken out, you couldn't do that. 804 and then 804 right there. So this is peak E/A, F/B, G/C. Remember, alternate count when you get an instant restart within 3 bars, and that's exactly what happened there. So now you've got leg G/C. Everything we have points to is probably a leg C, and that's where I am. So when the question was a really cogent one. You said, how do I know whether this could be a very serious sell or a very, very opportune buy? All I'm saying to you is keep the notation there. Let the notation sort itself out. There's nothing to do here. It's still very positive. Look at the MACD's good, stochastics at 71%, so it's got room to run to the 80% level, but it is pulling back. That's a concern. But the on-balance volume's still good. But look at the weekly chart. This is a brand new leg B. Because you call after G, you get no H's, so it has to be a B. So that's telling you that Harmony Gold, HMY, is a symbol trading at $12.94 right now, up 31, is still very bullish. The daily chart's getting a little bit overbought, only in the sense that this also could be an instant restart. Remember, I always circle within 3 bars of a peak D. If it continues higher to a higher high, you just say E. In your mind, you can say E/A, or you can type it in, doesn't matter, but still very good. And the MACDs are expanding. The retro strength is good. Stochastics flat at 93%. Boy, in a bull market, you can't ask for anything more than that. That's fantastic. So any pullback should still lead to slightly higher highs. And remember, I do have gold in leg C right now. It's pulling back a little bit. It's only up $1.60 at 3,042 0.8, but it's still very strong. And once again, the on-balance volume, both in Harmony and in the gold, says you can have a bit of a pullback here because the on-balance volume is a tad overboard. So I hope that helps you, that there's nothing to do about it. You stay long because everything is positive in the shorter term. The weekly is a shorter term than the monthly, and the daily is shorter term than the weekly. So therefore, everything so far with the V-shaped pattern spiking sharply above the 12.49 10th of February high, and it went down to 9.69. I mean, that's 28-something%. That's a big pullback. And now look what's going on. It's a brand new high. This is what you want to see. I hope that answers your question. Next question came in. Have I finished everything? No, I haven't. Let me just do that real quickly. So I'll do it again. So the Dow right now is even higher. It's up 133, almost taking out yesterday's high. Frustrating. The S&P, SPX.X, is trading at 56.92, up 17. Also, it's got a little bit of work to do. And also the same thing here, the 914 is not, it hasn't really shown any signs yet of crossing positive, but the MACD is very close to turning positive. That's what I'm saying. So I'm going to cover the overview in a second. Again, QQQ was lagging. Now it's up $1.73, still lagging yesterday's high at 482.66. The IWM is now up 40 cents at 206.77, continuing yesterday's turnaround, but it hasn't taken out yesterday's high yet. Days young. Let's go on to the SMHs quickly. SMH is just stuck. 227.60, up 19 cents. That's what I'm saying. That's one of the reasons why I'm staying with a longer-term short position from much higher up in the Dow, much higher up in the S&P short. I'll consider tomorrow whether or not we take a little bit more off and we keep a small core position. I don't know yet, but in the meantime, I am anticipating that there's going to be a bounce, and I drew it into the others. I'll draw it in right here. This is fading. That's the arch formation. The arch should turn into a V-shaped formation. Look, here's the Dow, INDU. The Dow, more like a V-shaped pattern, even though it drew in the arch, because you have to look at what if it's not right? What if it fails? So that's the situation there. Let's go on to, now let's go to gold. I want to get through these quickly because I got a chunk of questions that I need to answer. Made a higher high today at 3,065. It's down 1. I suspect it's going to pull back a little bit, but there's just enough residual strength maybe to make a peak C tomorrow with a lower high. Maybe Monday we start to move just a fraction higher. I think this is the area that I'm looking at, even though 93% in the stochastic is fantastic. So I'm anticipating that it's going to be some kind of news that really, maybe a transition, maybe because the dollar, which is up 66 cents right now, maybe the strength fails in gold only because of the former relationship of the mirror image of what gold is doing. The dollar does the opposite or vice versa. I don't know. We'll deal with one thing at a time. Look at silver. Silver did pull back pretty sharply. It's down 21 cents right now at 33.98, making that peak C. This is a little bit deeper than I anticipated. Our silver stock is still doing very, very nicely from the low where we bought it, but wow, it has pulled back quite a bit. So I'm watching that one closely. And look at this, 35.79 was the high back in October, November of last year. Pulls back to the 29s, rallying here, but it's struggling. It's at a leg C in the weekly chart. Remember, in this pattern, the cup formation, I usually say you can rally to just under, right on, or just above the previous high. Then you've got to be careful. So 35.79, it should try for that. We'll see. If it goes to 35.80, that starts a leg E in the monthly chart. And the monthly chart is still very strong, so is the daily. Let's go to high-grade copper. High-grade copper pulling back a little bit from the intraday high, but it's at 5.08, went to 5.14. Nice action, leg C in the daily, leg C in the weekly. Let's go to Bitcoin, BTC. Bitcoin is up 930. It's kind of struggling. It's not doing great, but as I said, I'd been way back when it made 110,975 at a peak E in the weekly chart that was in November or so. It double topped and this is I don't want to waste time today, even though it's Technical Friday, because I got a chunk still to do. The double tops are amazing. I just can't tell you how many dozens I've seen. 111,445 was the high. Oh, it went to a higher high. Is that right? No, it went to 110,180. Oh, this is the continuous. This gets smoothed out. Okay, sorry. So I got to change that. So it went to 110,990, 111,475. I'm sorry, I forgot the futures get smoothed out, so the prices are a little different. And it went to a slightly higher high. Oh, God, I don't want to take 11,445, 11,004. So, yeah, just a fraction underneath, and it turned down with a double top. So I'm thinking that, don't tell me we've lost another segment. Okay. As I'm looking at it, Bitcoin is just kind of stuck in the lower range. It had a spectacular move. I'll be back in a moment. Dow's up 230, S&P's up 29. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So for a little while now, I've been saying it would be nice. It's not an imperative, but it'd be really nice if yields just came down a little bit so that we could get something else off the table in the general market worry. Okay, so in the worry process, we've had a nice move up in bonds. The TLT is up 66 cents at 91.84. So yields, here's the TBT. So yields are coming down in the dreaded H pattern. And let's hope at 33.20 right now. It'll be nice if they take out the low that was made on the 4th of 32.42. That's 3.242%. And that'll be very good because it says, hey, yields can be just one less thing to worry about. So that takes me to, let's have I covered everything. Crude oil is not doing anything. I think I've covered a chunk of what I needed to do. So a couple of questions came in. And let me start with this because I'm going to make this for my overview this evening for my subscribers because I won't be here tomorrow. I will do my newsletter, but I won't be here. So I'll do this because there'll be a preamble to allow me to just get my thoughts together for this afternoon's video. And here we go. So I'll do this first. Hi, Basil. I wanted to let you know that I recently added your newsletter and I've enjoyed it thus far. One question I have is regarding money flows / rotation. You have indicated that U.S. market, you've indicated that money is probably going to rotate to other sectors. In brackets, it puts XLF, XLV, and XLRE, that's real estate, and IWM. Given that the U.S. market is so choppy, have you given thought about the money flowing to other countries? Any thoughts on buying one of the overseas ETFs like FXI on a pullback? If possible, it would be great if you could discuss on your show tomorrow. Regards, Robert. So, let me just do that because you actually have nailed exactly. I've been talking about this for a few days, as you know, but I can go into some other things as well because it's all pertains. So let me just let's go backwards. So as far as money flow is concerned, I have a different way of looking at money flow. I look at it more as the on-balance volume because that's telling me a great deal. Tom O'Brien used like Tom O'Brien. And he had a fantastic methodology where he used the volume as a precursor to moves up or down. I use on-balance volume. That's Joe Granville invented this way back, 1950s. But the concept is really simple. Advances, declines over the highs and lows. It's really simple. So now what we're looking at is that in the now let me go to this. I'll start off with the question was money flow. So the money flow, as I looked at it, is sequential in the sense that it goes sector through the sectors, and there's this rotation going on all the time. So as the dollar, and this is kind of what I might be wrong, but as I recall over and over again back in the first Trump presidency, he kept saying, we need a lower dollar, and then periodically I'd hear him talking about that. Well, you've got a lower dollar from the highs that were made back in January, and it's quite a bit lower. I mean, currency going from 110 to 103. As a currency, that's pretty big, right? So that's part of what I would consider the money flow in the sense that you've had the opportunity for goods that are sold, American goods sold overseas. It makes it more affordable for other countries to pay. Okay, just let's get that out. That's a way of looking at money flow. There's the Chaikin money flow. That's a different thing altogether. Now, as I look at it, if you're looking at the EEM, I must keep looking down to see that I'm covering exactly what I want to look. The EEM is the Emerging Markets ETF. 45.42 was the high back in late Feb, pulls back sharply down to the 42, 43 area, then rallies back. And where does it stall for the last couple of days? At 45.40. I don't want to go into it now. Maybe next week I'll take some time. In fact, I should write this up for the holding it up here. I don't know if my engineer's ready to do that for the Stocks and Commodities magazine that I've been wanting to write things for them for years, and I keep saying, I don't want to spend a whole 20 paragraphs on something that I can say in just a few words, and they tend to like the lots of words, so I just skipped it. About round numbers, etc. Look, 45, 42, 45, 40, and now it's pulling back a bit. Look at the weekly chart, did a beautiful cup formation, kind of stalling here, emerging markets. So money has been flowing into that area as well up until recently where the Dow, now the money has gone into the EEM, that's the emerging market ETF, the FXI, which is the iShares China Large Cap ETF. And yes, I was so busy focusing on our American markets that I kind of skipped saying, I've got really, I spoke about it every day. We were looking, I have GT sends me most days information on the Chinese market, Chinese stocks. And I was going to say this instant restart, if we break out, it would be nice to start a position in the FXI, which is ironic because I had to say you always tell people, why go to China when we've got enough issues with stocks right here? But that's different. This is because there was a good trade. Now it's just about to stall. 37.50 was the high back in October. I think it was October. And then what was the high yesterday? Oh, today. No, this week. The high today is 38.73. So we're going to see now whether this stalls a little bit and our market can actually have this. What I'm anticipating is a pretty good counter-trend rally. Okay, so with that, and then I just wanted to go to look, EWG. After everything you hear about Germany having so many problems, look at the market. It's gone from July of 2022 in the 19 area to 39, peak D, peak E, right? It's now just stalling a little bit, leg D in the weekly chart, monthly chart, leg E. So Germany's done with everything that you hear about them having done so many things wrong. I'm looking at the chart. I remember I did the same thing with the French market years ago when everybody said, France. I'm looking at the chart and say, wait a minute, France is making a new recovery highs. What? Okay, so EWG and EWU, which is the United Kingdom, also doing, look, it's got this inside Chapman wave, inside track repellent zone, making higher highs, higher lows, and it's just bumping, it just made a leg C, maybe a peak C. It's almost like gold, and maybe it'll have one more pop, and then it's about to take a breather, but it's only a leg B in the monthly chart. So that's still doing very nicely. So that's what I want you to do there. Then the question came up about the XLF. So the XLF, let me go here for a moment. Ooh, where do I go? I go here. Yeah, let me just show you this chart. I'll put it up. You can look at it during the break. This is the S&P and the XLF financials. Look at this monthly chart. Look at the pink the last bar. I'll be back. Dow's up 238, S&P's up 30. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we're back and we're looking at Hong Kong. The ETF is at 18.04, down from 33 cents, a little double top right here, but it could go to 1912, the 200 period exponential moving average, slightly different chart to the FXI. So let me go through these. So we've got the XLF is what I was talking about a moment ago. Oh, right here. XLF right there. And this is the chart. Look how this in sync it is. This is the XLF financials. This has got Berkshire Hathaway, JP Morgan, the real biggies. The KREs, the regional banks, and we're going to be looking at that on Monday. I won't be here tomorrow. Meantime, the SPY, the blue bar chart right here, look how it's pulled back. Look how coincidentally. So I'm not ignoring that. This is a monthly chart, and I can just tell you this. If the SPY, which is at 570 at any time in the next 6 weeks or 8 weeks, takes out five, this candle right here. Right here, that's the candle of the low of September, which is 45. Oh, what am I talking about? Oh, I'm looking at the wrong thing. So how can I tell which it is then? Oh, it's pink. So the pink is 539.44. 539.44. Yeah, if it takes out 540 over the next, I'd say even 6 weeks, that's going to be very serious, because if the XLF, which is trading at XLF is trading at 49.91, if that goes under 40, that's a big problem. But so far, we've seen this before. You've got that, look, and then you went on, and then you made lower highs and lower lows in the XLF, but higher highs in the SPY, and then you made a unison low. So I'm just watching it. This is spoke about the XLF, and that's what I'm going to. Don't want to lose that voice. Here we go. XLF right now. This is the S&P Select Financial Spider Fund. A very nice move to the upside. Now, this is the first time in years that we've seen bonds go up when the market's been kind of down, right? That's good. We haven't seen that for a long time before. Everything went down. And look at the XLF rallying nicely. So we've got our Bank of America still holding. And this normally by now we've got out. When we haven't wanted to get out, we've got in so nicely. And it ran in the 32s and goes to 47s, comes back down to the 39s. And here it is at 42.88. This is nice, almost taking out yesterday's high. I like that. That's a good sign. And the next question was, so the XLF, I've given you the big and the small, the longer term picture. Let's look at the XLV. The XLV now, this is The healthcare, S&P Healthcare ETF, makes an all-time high back in, right there. Did I not put the date? I guess I didn't. Back in September, 159.64, tumbles down to a low in December of 135.95. And here it is in the middle of the range, doing okay, holding well, because there are some, for instance, you never can tell. We've got our long position in Solventum. Look at this, the cow's rebounded. Look at that, nice, it goes to a peak D, way up at just under 86, slumps down to the 72 level, and here it is back at 79. So in the healthcare, I think because of tariffs and everything, this is a sector that I'm monitoring very closely for some kind of, because they've been under pressure for a long time, to see whether or not this continues high. And so we've been along for quite some time. So we've got this as a core position and had trading position. I was going to add to it the other day, and I didn't because we were looking at other things. The next question you asked was the XLER. So this is the REITs, the real estate select sector REITs. Makes a high, an all-time high, a double top. I mean, I love this. Look at what a technique. 45.58 was the high the week of the 20th of September of 2024. Tumbles down to the 42s in the 8th of November, and then rallies back where? To 45.48. Remember? 45.58, 10 cents lower, and then it double tops. Look at all the technicals were weak, and look how it came tumbling down. So this is an area that I'm looking at. I found a lot of REITs. I have a problem for subscribers recommending REITs because there's kind of a tax something that goes on. It's just a little paperwork, but I'll mention that when we go into any REIT. I will talk about it. Let's just see where Simon Properties is right now. Have I updated it? Yeah, it went to a D and an E, and it's now taken quite a dive in the weekly chart, an E in the monthly. So I'm going to be watching Simon Properties Group shopping malls. I think they come out of the Boston area. Look, peak A, peak B, C, and there it goes to a D in the daily chart. There are lots of clues here to tell me whether or not the REITs are going to be in play in this particular move right now, if correct, about saying that there could be a bounce. So I'm looking at different stocks within those sectors. We want to constantly look at the steel sector, held very well yesterday, holding okay today. It's 64.30, down 50 cents. Is that going to be a double top and turn around? 200-period moving average of 65.15. If you look at X, that's U.S. Steel having a pullback today. It's had a very nice rally, but it hasn't really broken out. So there are areas. Alcoa is looking pretty nice here, but is it a buy? The deep cyclicals, but it's down 10 cents at 35.22. So I'll be talking about that in my, basically it's like a webinar today. If you're interested, sign up. It will be free because you can sign up and you've got 30 days to say, hey, this is it was worth listening to this, but I don't want, it's not my kind of newsletter. Or you can say, great. Or like Robert, because I'm really enjoying it, and that's very nice. So it's already gone to a D, Alcoa, and it's pulling back a little bit. The stochastic and everything's just turning positive. Stochastic 84%, but it hasn't. Look, it's already gotten to a D in such a small move. Peak A, peak B, peak C. Yeah, it's a big percentage from 30 to 35, but that's not what I expect in really big moves to the upside. And as I say, these are deep cyclicals, so you got to be a little careful. Now, here's another thing that I want to look at here. Something that's intrigued me is we've had it before. We did very nicely. We haven't gotten back in. ARK. So this is ARK Innovation ETF. It's nice today. It's up 74 cents, 50.79. But these are not the breakout legs that I really like to the upside. Look, before, when it really, look at how it goes. Trough, we went long at 50, just the low was 55.25 back January the 13th. I think it was the next day we went long. We had already been long and really made some nice money. Then we were back in and made some money right there when it went to 68.43. Then it comes down and it not only takes out the 55.25 low, but it plummets down to the 47 level. So this is part of what I'm looking at. That's the reason why I'm saying looking out, I still think that the VIX index is going to tell us when it's the low. So far, we've got things that I say might be a low. That was the high of at 29.57, back around about, what was that, the 13th? Yeah, the 11th. On the 11th, it went to 29.57. Now it's down at 19.49. So that's another reason why I think we've got room to move higher, but very selectively. And I'll leave it at that. I'll be back in a moment. Dow's up to
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I've gone through a chunk of things. The Dow has now made a new recovery high from yesterday, extending this leg B. The pink 9-period moving average is rallying, but it's still got a long way to go to cross positive. I'm suspecting that when it gets very close to the black 14-period moving average and ready to turn green, that's when we get our biggest challenge of whether this market, will, if it can rally, can continue rallying. Meantime, the MACD is very close to turning up. The relative strength is good. So let me just sum this up because I won't be here tomorrow. I'll be back on Monday. Let's just sum it up. So the Dow, I believe we're in this counter-trend rally. So far, it actually looks like a V-shaped pattern. So every time I put in the arch, it says this is what you got to be careful of in case it rolls over. But I'm also having to put, I won't do it until the close today, I won't put in the V-shaped pattern to say that that's a pattern that is predominant. until it actually becomes predominant. And I would say the MACD crossing positive would say it could even go to a D. All right, that's time. That will take another week or so, but I'm just going one step at a time. Will I re-enter what we were in yesterday? I always say that if I go intraday, and I haven't done that for ages and ages, it's invariable that the next day you can get a better price. So don't even bother. But in fact, I did it yesterday, and today it would have been better, but I didn't want to rebuy because that's just, it's too quick to do that. Okay, so within this context, here we go. Look at the Dow. The S&P is running very nicely, but it's not that. It's S&P hasn't taken out yesterday's high. You can see how selective this is. The QQQ hasn't taken out, hasn't even gone to a leg B yet. IWM, very nice action, but it hasn't taken out yesterday. So this is a work in progress. I wouldn't get too excited. So we remain short in the more the intermediate weekly type thing. Short term, I do anticipate there's at least some relief upside action, but it's very selective. That's the way it stands right now. Thank you for Steve Rhodes, and happy birthday, Tommy. And I will see you